In today's video, I'm going to teach you how to use Ctrader risk management tools. We'll keep this clear and practical. First, open the Ctrader website in your browser and sign into your account. Make sure you're in the correct live or demo account because the figures you'll see depend on your account currency, your leverage, and the instrument you're viewing. Inside the trading app, navigate to the order panel for the market you want to analyze. Locate the volume field, which is where you define the size of your position. Click directly on the volume area to open the context menu. Think of this menu as your real-time risk snapshot. It shows the current pip value and trade value for both buy and sell right next to each other so you can compare. Pip value tells you how much your profit or loss changes for every pip the price moves. Seeing this number before placing an order helps you translate market movement into actual currency impact. It's a straightforward way to gauge whether a 5 or 10 pip move fits your tolerance. The value displayed reflects your current volume and the instrument's characteristics, so you can interpret risk in concrete terms rather than estimates. Trade value shows the total notional size of the position at the current price. This gives you context for how large your exposure would be. It's useful when you want to keep exposure consistent across different symbols, especially those with very different prices or contract sizes. In the same menu, you'll also see the commission and the required margin for both buy and sell. Commission is the fee charged to execute the trade. Some accounts present it per side, while others show the round-trip cost. Either way, it's an important part of your total cost, particularly if you trade frequently or scale in and out. Margin is the amount of funds earmarked to open the position. It reflects your leverage and the instrument's requirements, and it's essential for managing available equity and avoiding margin pressure. If the margin shown looks high compared to your plan, the readout is telling you that the position size implies a larger commitment than you might want. Because these values are calculated for the exact symbol and price, buy and sell can differ slightly due to the spread and pricing. Always confirm you're on the intended instrument and account before relying on the numbers. That's it. Sign in, click the volume field, and use the pip value, trade value, commission, and margin readouts to evaluate cost, exposure, and potential impact before you place a trade. This quick check helps you size more confidently and manage risk with clarity.